Hello everyone, my name is Humble Wellington and this is my midterm dashboard for CIS 3367 for Professor Wheeler. For my dashboard, I chose to focus on stock market return and performance under different administrations, presidential administrations from 1950 up until 2016. And I also wanted to look at how the economy performed as well, to give me a sense of the economic performance. I chose to look at inflation and unemployment, as well as this is inflation and unemployment, as well as hourly wage and interest rates. So, these two, in conjunction with the stock market, should give a good picture of how the economy did under each administration. In economics, there's a classic trade-off between inflation and unemployment. This is typically represented in the Phillips curve. So on the vertical axis, you would have inflation, and then on the horizontal axis, you will have unemployment. And so as one is going up, the other is supposed to be going down. That relationship tends to hold in the long run. And so before we dig in and play around with this just to get different insights, I kind of want to explain my different data sets and where I pulled them from. So I'm just going to tab to the beginning here. The first thing I had to pull was my stock prices. So to pull my stock prices, I used this bulk stock quote downloader, which was built by a guy named Samir Khan. It's VBA enabled. And I'm going to put a link at the bottom of this video as to where you could get this stock quote downloader, as well as kind of like the link to the different resources that I used. So this resource is pretty, this stock quote downloader is pretty good. You simply just enter your start date, your end date, the frequency that you want to be looking at. So these are like daily prices, weekly prices, monthly prices, and then your the ticker for the stock you want. So that ticker there is the one for the S&P 500 index, and you go ahead and hit get bulk quotes. And there's two indicators here. Pretty much tells you if the pool was successful or not, right? And this is the output for that pool. And so for my dashboard, I really just needed to look at the adjusted closing prices. I did not need these other information, but if you want to do a more detailed or in-depth analysis, obviously more data points to be used. My next piece of data was unemployment. I got this from the Bureau of Labor Statistics website. Sources up here, and I pulled it from 1950 to 2016. And for my data set, I just took the average for each year. So 1950, this data set gives what the measure is per month. So I simply just took the average for each month, and that's what I used in my data set. Inflation. I pulled the inflation data from a site called inflationdata.com. Also took an average like I did for my unemployment data. Actually, no, this average already came computed, but I double checked it, and it ties to what it is for each, for all the months in each year. For my wage data, so wage is a pretty kind of like difficult data set to get, and so I had to turn to a website called measuringworth.com. They focus and specialize in aggregating economic data, so I was able to get wage data from them. The wage data though that I got was production workers hourly compensation, which is really the hourly wage for production workers aged 25 and over with no high school degree. And I pulled it from 1950 up until 2015, I believe. They did not have it for 2016. I could have found 2016 wage data using the current population survey, but that number would not tie to sort of like the source that are used for these other data sets. I did not include that. Um, and then for the interest rate, I went to the St. Louis Federal Reserve site and I pulled the federal funds rate. The federal funds rate is an interesting, it is an interesting interest rate number, but it's a core interest rate figure that really drives all the other interest rates in the economy. It's the interest rate that different depository institutions lend funds that are parked at the federal bank to each other. So that rate it's going to determine the different rates that they're going to lend to borrowers and different corporations. And so the Federal Reserve sets the target for the federal funds rate and uses open market operations, which are the buying and selling of government bonds, to kind of like drive towards the target that they set. So it's a key interest rate figure that people watch, investors and finance and economic personnels. And so those are my data sets. And so just coming back here to my dashboard, we could kind of play around with it now just to get a bit more insight as to how it works. So my three slicers are here, presidents, year, and party. And as I click each one, it changes the data set for each graph. So let's just see how Bush Jr. Did, right? So under his administration, the S&P had a cumulative return of negative 21.4%. We see that unemployment went up from 4.7 to 5.8%, and inflation went up from 2.8 to 3.9%. We also see that wages trended up and interest rates really went up and then fell towards the ending of his administration, so from 2006 to 2008. And pretty much, the financial crisis happened 2008, and just to stimulate the economy, we know that the interest rates was kind of like raised practically to zero. So that ties to that. And then later on, Ben Bernanke, who was the Fed chairman, kept the interest rate low and did a lot of stuff to stimulate the economy. So that's sort of like how Bush did. When we look at his father, let's see if his father fared any better. His father, we see cumulative return of the S&P of 45.5%. We see inflation going down, but we see unemployment really spiking up. So, that trade-off did hold there. Also, interest rates went down, wages were up. And typically, when you see interest rates falling, that's a sign that the economy is, it's good for the economy. And so, lower interest rates tends to correspond to stronger stock prices. That's because, companies are able to borrow money at a cheaper rate and, could finance a lot of things and their businesses, and earnings will potentially be good, so which will lead to higher stock prices. So low interest rates tend to be good for stock markets. And so yeah, so a lot that could be done in this dashboard, play around and just get different insights to different administrations and how they did. Eisenhower had a good year, a good term cumulatively. But one interesting thing I did want to look at that motivated the study was just to see in aggregate if Democratic administrations did better than Republican administrations, because Harry Truman was known to say that if you want to live like a Republican, you have to vote Democrat. And so I kind of ran the numbers there, and it looked like under Democratic presidents, the S&P had a cumulative return of 1,519%, and Republicans had 888%. So Democrats outperformed by almost a factor of 2. So Interesting to see that. I think a similar study was also done using the Dow Jones Industrial Average, and the numbers were also leaning towards the Democrats. So, interesting observation there. So, thank you all, and that's my project. Please, if you have any question, post below. And again, I will post those links to the stock quote downloader and all the different links to get the data sets. Thank you. Bye.